let's talk with the management or connect with the management of Ethos. We have Mr. Yashovardhan Saboo, who is the MD at the company, joining us this afternoon. A very good afternoon to you, Mr. Saboo. Thank you so much for joining us on ET Now. And let's talk about the recent partnership that you signed. The company has signed an exclusive partnership with Swiss watch brand Speake Marin for Indian market. Could you tell us what the pricing range would be? What kind of revenue potential is expected from this particular tie-up?
Yeah, we are very excited about this new tie-up. Speake Marin is a relatively new brand, and it was founded actually in Britain by a master watchmaker, and currently it's actually being led by a lady in Switzerland who's a very passionate watchmaker herself. So these are very specific high watchmaking timepieces, and typically the price range, it starts from around, I would say, around 12 to 15 lakhs and goes up all the way up to 50, 60 lakhs and more. These are highly specialized watches, usually sought after by watch collectors who want to collect very specific watches, and that's why we are very excited to have this brand now available to Indian watch collectors as well.
That's very good to hear, Mr. Saboo. But the last time we spoke, you also talked about how the entire luxury watch segment is growing in India, given that services has been better. Can you talk to us about how the entire wedding season is likely to pan out? Will Q3 see bumper sales? How's the client confidence on the ground?
We are seeing a very strong growth trend. This quarter will, from all that it looks, we are almost through 2 months of the quarter. It will be a record quarter, the best ever for Ethos. And of course, the market during the wedding season is always strong. Watches are pretty much becoming a standard gifting item during weddings, and but it's not only the wedding season. I think there is watches are increasingly used for all kinds of celebration. People are celebrating anniversaries, getting a promotion, gifts for any happy occasion. And we're seeing a strong demand coming, and the growth is sort of continuing. We had seen this trend actually even in the quarters during the COVID period when lockdowns receded. We saw strong demand, and that is continuing.
Right. So you've said that you are optimistic about the growth. You're seeing a strong demand pickup going ahead. You expect good revenue growth. So your company has actually guided for a same-store sales growth between 15 to 20%. With the pickup in the demand, and like you have said that there is a great strong demand that you're seeing, will you go ahead and raise that growth guidance then?
Well, actually, the SSG guidance, I just want to correct you a bit. I think last quarter we had an SSG of about 17%. We're not giving really a guidance for SSG, but we expect SSG to be in the 11 to 12% range. We think that's a very strong SSG growth, and that is based on the kind of growth trend that we are seeing right now. Overall, our guidance we gave for this year was a growth of about 30 to 35% over the previous year. And despite some of the global sort of worries that are happening, we don't see any reason in India to revise that guidance for growth, overall growth, 30 to 35% in this year.
Right. So talking about the gross margins, they've been above 32% in the quarter gone by. Will we see the margins sustain above these levels? Or if yes, if you tell us what would be the further levers of growth in margins? In particular, exactly, I just want to know, where do you see your margins headed from here on?
We believe the current overall margins are sustainable. We don't expect them to expand further because they are already at levels that we had projected for 1.5 years, 2 years ahead of us. However, I must say that from quarter to quarter there is always some change that can happen due to the foreign exchange rate. So, in Q2, we had a very favorable foreign exchange rate, and that helped the Q2 margin. There may be variations in this going forward, but on an ironed out, on an average level, I believe we are definitely at a sustainable level of gross margin.
Okay, Mr. Saboo, we'll let you go on that note. Thank you so much for joining us today. So that's the commentary coming in from Ethos Watch. They're expecting a revenue growth of 30 to 35%. However, on the margin front, given the fact that we've already seen quite a bit of up move, they say that the margins will be sustainable, though upside would be capped from here on. And SSSG of around 11 to 12% for the entire year is what they have guided for. The stock currently holding up at around that 900 rupee mark.